Hello, everybody. This is Ryan with firmTRAK Solutions, and I'm joined today by founder and partner Richard Marvel. I wanted to delve into one of the niche areas of the customer base that firmTRAK focuses on, and that is doing the back office bookkeeping and virtual CFO work for a restaurant franchise and specifically they're a full service restaurant. And I just was taking a look based on what I've been seeing, what the trade press has kind of been saying about full service restaurants and their overall performance in terms of the economy and the industry in general. And I ran across this article from the restaurant business online website, and they have an article here that was published last summer in July 2025, and basically the trend we're seeing overall is that bankruptcies have wiped out a lot of full service restaurant locations in 2024 when this article was published. A couple of the big ones you've all seen a lot of press about and probably noticed in your areas is that TGI Fridays and Red Lobster both did some sort of high press release closures, especially Red Lobster. There was a bunch of articles that came out that they went out of business from not doing the numbers correctly on serving endless shrimp. That's not really necessarily what actually happened, but we've been seeing a trend since the pandemic of full service restaurants having a very tough time in 2019 to 2020, being cold from the pandemic, and then they showed 3 years of growth. And now here in 2024, there's another shrinking of the market. And some of the actual numbers that this article puts on that is the full service locations in the US have shrunk for 2 consecutive years and 4 out of the last 5. At the end of the 2024, the overall full service segment was nearly 18% smaller than it was in 2019. The year before the pandemic. And that has been a trend for the last 4 to 5 years. And it's just one of those things that has broader implications on consumer trends and price sensitivity. And if you're not in the full service restaurant industry, Rich, what do you think that kind of means for consumers in general and sort of the consumer habits in general in the economy?
Well, I think it speaks to there could potentially be about 3 things that I'm noticing, or I believe that the restaurant studies are showing. I mean, if you start with the fact that the core expenditure of a lot of people are where they want to spend their money when they go out to eat, I think that kind of waterfalls into some different areas and can give some background or insight into some of the other types of industries, or basically how consumer habits are changing. And I think from reading the restaurant studies and taking a look at what's taking place in that particular space, it looks like the middle of the industry is getting squeezed. Either you have to be a low-cost premium or a low-cost value. You need to have a premium product differentiating yourself from the middle. So I think these consumers are going to go more low-cost value or a premium differentiated higher level experience. So I think the middle is going to continue to get pressed. And I think that's going to be the same relative to any industry that you're in. So if you look at, even I was recently at a vet clinic, and Good Vets. Good Vets is a premium product. You pay a premium price. They have a coffee bar. You can get sodas, as opposed to going to your local vet who maybe is more lean and mean and doesn't have those amenities. Good Vets are now popping up in more premium spaces because they're trying to differentiate and provide a higher level service, and clients and customers are willing to be able to pay more. I think the pricing of your product, your service, your good is going to also have to change, because you can't just across the board raise prices. I mean, the restaurants have shown us this. If you have a restaurant price increase of 10 or 15% and nothing else changes, your consumer is not going to just accept that and move on. What your consumers are doing is they're starting to look at whether or not that price increase is justified in the form of a better return on investment. Are they getting something that's more convenient? Are they getting more of a premium experience? And those industries, services, businesses that are start to raise prices are going to have to provide a clear value add. That is, it's going to have to be more value, so they're getting more bang for their buck, or the price increase is going to have to be commensurate with some sort of a service increase or a quality increase. The status quo of just raising prices across the board, I don't believe is going to be sustainable, and you as a business owner must be aware of that. And lastly, and I think it kind of boils all into this particular issue, is that the consumers are there. I didn't know, and I haven't seen the total numbers on how much capital or how big the full service restaurant business is, today as it was yesterday. But I think that the total value spent is still there. So the money hasn't stopped flowing. The money is just moving to different directions. So the consumers are being more intentional in where they go, and they're likely much less loyal than they used to be, because loyalty would go to some of these legacy brands like Red Lobster and TGI Fridays. So I think that the loyalty issue and still is there, which just means that the businesses that we work with, that I run, that Brian runs, these businesses are going to have to continue to win business every time that they have a client. This isn't the old school where you annuitize a client by getting them one time and providing service. This is a model now where I think you have to provide the service, and you have to re-win their work and their business every time, either in the form of a sale, and you need to do that in the ways that we talked about, either lower the cost and provide higher service, better quality, or if you have to raise your costs, you provide some sort of a luxury experience and you differentiate that way. So I think that there is a lot to be looked at when you start taking a look at what happens with consumer habits as it's going out to dinner, because that's one of the first to tell. And I think the tea leaves kind of show what I just indicated as far as what's going to happen in the regular markets.
Yeah, I think that's three great things to point out, and it's a good lesson that doesn't just apply to the restaurant industry, it applies overall. Let your customers know where your value lies. That's been marketing 101 ever since we've been in business. And now with the way the economy has been more volatile here lately, providing that quality or proof of that quality is going to be a big differentiating factor. So that's it for us. Thanks for taking the time to check in with firmTRAK Solutions today. As always, please reach out to us in the comment section of this video or check us out at firmTRAK.com.